What is up, guys? Dirk here. It is Monday. It is the 21st of November. The weekly candle has just closed. So in this video, I'm going to give you an update here on the weekly candles on Bitcoin, Ethereum. We're also going to look at the S&P 500 and the Dow Jones, and I'm going to give you my thoughts on what I think could lie ahead. Now, before we get started, I am in a bit of a noisy environment, so hopefully the background noise of the traffic isn't going to be too bad. If you do still hear it, please apologies for this video. The next video I will try and be in a different location, but I just wanted to get this information out to you because it's time sensitive and hopefully it can help you make better decisions. As always, if you're new to the channel, welcome. Please subscribe, click the notification bell down below. If you want to get on my email list, there's the first link in the description down below. And if you want to stay up to date in real time with what's going on, feel free to follow me on Twitter or join my free Telegram. The links are in the channel down below. I also do want to let you know that since Black Friday is coming up this Friday, starting today already, I am running a Black Friday special offer which starts today, this Monday, and it runs until next week Monday. So for the next 7 days until Cyber Monday, I'm going to give you the best deal that I can possibly give you to join my Intelligent Cryptocurrency VIP membership. Also, after next week, after Cyber Monday, I will be increasing the price permanently of IC VIP. So this is the best time to get in. It's fully covered by a 60-day refund period. If you want to get into the details, I will add it in the link in the description down below so you can check it out and see what's included. But now I want to dive straight into today's content. Okay, so Bitcoin, as you can see, is currently trading under $16,000 once again, and we had some more sell-off in the last hour. So this is nothing surprising. If you have been following my updates for the last couple of weeks, we've been having here this horizontal support around this $19,000 level that we bounced on for so long. The technical analysis rule is the more times that price sits on a support, especially coming from a downtrend, the more likely that support is to break, which is exactly what happened 2 weeks ago. When we got that break, I said, well, look, there's basically no support here between this level and this level. So we're sitting here. Last week we had a very small kind of like doji candle over here, and my guess is that this week we get continuation to the downside and we probably hit this level, because what I can see here on the charts is there's very little support here. Okay, we had this one thin quick move up here. We had the previous all-time high in 2017. That's it. So basically between the breakdown level and this level over here, it just feels like there's air and we're just going lower. That is how I see it. Of course, it's not 100% guaranteed. If for whatever reason something happens and we go back up here, I'm only starting to consider any sort of bullish scenario again once we reclaim the breakdown level at about 19,000. So we need to get a weekly close back above 19,000 before I consider anything sort of bullish again. Or the other place to get bullish is after a capitulation, once we got a final washout, which I don't know where that's going to be. It could be around this $12,000 level, but maybe it breaks down below it. Maybe it goes below 10K on a wick. That is still a possibility, considering how bad the environment currently is, the crypto space, with the contagion from the FTX insolvency. Right? FTX went down. We don't know who's all exposed to it, which companies had loans, which companies are now affected, which companies held coins on their balance sheet that are now worthless, and so on and so forth. So we have to see. There's even talks now about Genesis potentially being bankrupt, which also maybe means Digital Currency Group, and who knows how bad this fallout can be. So at this point, there is just the potential for any sort of bankruptcy to come out, any sort of news, any sort of tweets that could really just drop the markets here from 16 all the way to about 12 over here, which is the support, which if you look at the charts technically, that is just basically where it was likely to go at this point anyway for this bear market, regardless of whether we would have known it was FTX or whoever else was going bankrupt. We didn't know any of that, but we look at the charts, and the charts were telling us, well, that is the most logical level of support after it comes all the way back down, and it could wick below it a little bit, sure. But this would be an area for me where I would start to get interested. We would also have a bullish divergence on the 3-day, probably on the daily, probably on the weekly chart, which is the opposite over here of the negative divergence we had here. You can see over here on the other side, it made a lower high, but it made a higher high. So once we get this to complete over here, where the price makes a lower low, but the RSI does not confirm that, it makes a higher low, we have the bullish divergence on weekly, and that likely gives us a good chance for an actual bottom to be in this bear market. And of course, that doesn't mean we reverse straight up right away. In fact, it's likely, like in 2018, after the final bottom is in, we probably spend at least 3 to 6 months going sideways before any sort of move to the upside. And that period is likely going to be very, very low volatility, meaning that for 3 to 6 months, we could trade in a very small range, just going sideways, and the crypto markets could become very boring. So just so that you're aware of it, that is what I'm expecting at this point in time. So in terms of levels, this is the obvious target over here. So probably between 12 and 13,000 over here, but it could wick below it, and maybe even below 10,000 is a possibility. Okay. In terms of upside, I'm not getting interested in any sort of bullish narrative, like I said, until we reclaim 19,000 with a weekly close. Until then, any sort of little pump could just be a short squeeze. It could just be a little rally, because if things are really this bad in the markets and people are looking to liquidate whatever assets they have due to fear, or maybe due to legal obligations, having to liquidate whatever they have left to pay off loans or to pay off debt, right? Any little pump, any price that they get better than current prices is of course something that they're probably going to sell into. So if the price now is 16,000, if it goes to 16.5 or 17 or 17.5, they're getting maybe 5 or 10% more than what it could be, and that might be a reason for more people to sell more, which creates more sell-off. So those are the levels I'm looking for in Bitcoin. If we're looking at Ethereum, it is currently trading at 11.19, as you can see over here. So I've been saying for the last few weeks, once we broke back below this 200-week moving average, which is in red, it was basically just a big bearish signal. And until we reclaim this, so until we get back above 1330 right now with the weekly close, Ethereum is just bearish, and the likely target is going to be at least to sweep the June lows, because like I've just shown you with Bitcoin, Bitcoin's price is already lower than it was in June this year, but Ethereum is not. It is lagging behind it. So I'm guessing, this is my theory, that Ethereum has to play catch up. It's going to wick below, or at least sweep below this. Okay, so you can see there's a fair value gap over here, so somewhere between $700 and $900. It is also the high over here, and you can see there's price activity over here. So that is the likely target, in my opinion, for Ethereum, as long as it's below this 200-week moving average. But if things get really bad, it could break down below that, and then the next level of support is a lot lower. It's probably between $300 and $500, which is this area over here between these peaks. Let me draw that real quick for you. It's basically just this level over here, where you can see there's a lot more activity historically, even going back over here, you can see. So this would be an ultimate, much more stronger support if this one doesn't hold. But I do expect this one to get tapped and filled over here, this fair value gap, and potentially we might even see it go all the way down here. So we're going to have to wait and see. And again, like I said, nothing bullish in my opinion for Ethereum until we can at least reclaim that 1330 with a weekly close, or until maybe we get down and we get a capitulation and we get to levels around $300 to $500, then I would also start to get interested in terms of accumulation or buying more Ethereum. So let's have a quick look at the S&P 500 and the Dow Jones Industrial Average, just to have a bit of an idea of what could happen in the stock markets this week. And of course, the reason being that if the stock markets were to sell off more, it would likely impact crypto even more. But at this point, I feel there's a very clear separation between crypto and the stock markets because of the contagion within the crypto space. So essentially, even if the stock market moves higher, the crypto market could still move lower because of that isolated contagion within the crypto space. But if the stock markets move lower on top of the contagion that already is in crypto, it could make things even worse for crypto. So as you know, if you've been following me here, the stock markets, again, the 200 simple moving average in red, the 50 simple moving average in blue. This is a weekly chart, and basically as long as we hold the 200-week moving average, the bulls have a chance. The macro bull market is still in play. You can see over here, when we get back below there, that is dangerous. That becomes 2008 crash territory when we break below it. But what we really need for a complete new bull market or a bullish territory, we need to reclaim the 50-week moving average, because that is when you get these crazy upside moves. And that is when we have potential to take a run at the all-time highs or maybe even new all-time highs. And currently that level is, you can see it's a little bit lower. You can see it's about 41.50. So if we can reclaim that and get a weekly close above that, things get interesting for the bulls and we could potentially take a run at those all-time highs. Until then, we're just sitting in between these two moving averages, and you can see they're moving closer and closer towards each other. So at some point, probably within the next couple of months, we are going to see a move. I'm guessing a big move in either direction, and we're gonna have to wait and see. Does it get reclaimed? Which, based on the macro, we would need quantitative easing. We would need some sort of change in policy for that to happen, I think, or stimulus, central banks printing money. If we can get that, we probably break to the upside. If we get rejected over here and we go down and we break back below here, then the potential repeat of 2008 scenario is still on the table with a lot lower in the stock market. So right now we're in a bit of a wait and see mode. Set some alerts over here at the 50 and at the 200, and let's see how that plays out this week. So far we are still making lower highs here, so this is still a very clear technical bearish trend. You can see every time we're making a lower high. So if once again now we reject and we go down, we are still in a bearish trend. We have made another lower high, and that does not look good. So we want to get back above this level for the bullish trend to be able to continue. Now, if we take a look at the Dow Jones Industrial Average on the weekly chart, you can see this actually paints a much more bullish picture. And we have to ask ourselves, I guess time will tell, is the Dow Jones leading the S&P 500? So are we about to see a major rally in the stock markets? Because if you look at this purely technically, you can see the price of the Dow Jones has closed above the 50-week moving average, and that is usually ultimate bullish territory. You can see over here, anytime in the last decade that we were above the 50, the price was just going up. But sure, you have the fluctuations up and down above it, but you can see the trend was clearly up. As long as we were above that, every time a pullback was back to the 50, but continuing higher and higher and higher. Eventually broke it, then you get a pullback to the 200. But the 200 holds, the macro bull is still intact, okay, and goes up and back to the 200. It holds, gets back above the 50. We have a major run here, break below the 50, and then we trend towards the 200. Almost hit it there, get above it, major run to the upside. Again, March 2020 sell-off, breaking below the 200. You can see that was a scary move. Got back above it, macro trend is back on, get back above the 50, major rally in a short period of time, okay? So we've had the similar thing. We pulled back here to the 200, bounced, rejected, back to the 200, little false break, and a crazy rally here. And now we are back above the 50, as you can see over here. So that is very interesting. I guess I can circle it for you, but you can see what happened over here when we reclaim it every time, okay? Major run to the upside, major run to the upside, major run to the upside. We have just reclaimed it over here. So we have to wait and see the next week or two. Is this going to be a false break? Is it going to reject and come back down? That would obviously be bad. And in the same way as I spoke about the S&P 500, if we get below the 200, this is very bad, because then we are in 2008 territory that can go a lot lower. As long as we're holding this though, we're here, the bulls have a chance. As long as we're holding the 50, I mean, we could be looking at new all-time highs for the Dow Jones Industrial Average, right? It's not that far anymore. We have reclaimed the 50, and this can continue higher. So if the Dow Jones is leading, we would end up seeing that pretty soon in the S&P 500. If the S&P 500 reclaims its 50 moving average on the weekly, like I just showed you, then I think there's a really good chance that the stock markets run back to their all-time highs. Obviously, I'm talking about the indexes here, not individual stocks. I mean, we'd have to look at all different charts here, but we're talking about the Dow Jones, the S&P 500, and as a result, I mean, if those are going to new all-time highs, we're probably going to see some interesting things in the stock market. And then we have to see, how is that relationship going to play out with crypto? So if then we're looking at Bitcoin as the kind of bellwether for the whole crypto markets, then we have to ask ourselves, if we are going to get new all-time highs in the stock market, but we are getting the lows of the bear market within the next 2 or 3 weeks, could that potentially set us up for a quicker recovery where we might not go and spend 3 to 6 months, even though that's the expectation? Maybe we go down and we have a quicker recovery and we get some sort of 2019 like this, where we had a 3x. So imagine it drops to 12,000 or 10,000 and then pretty quickly starts to reverse and goes back up to 30,000 or 36,000, which isn't even that crazy. You can see that would be a rally up to about over here. That would be potentially, if the stock markets just go on a continuous rally, who knows what the reasoning behind that might be, if the central banks start printing money, etc., so that the bottom in crypto could come as a result of the contagion, the final flush, the final washout, but then the stock markets could help pull it back up in a quicker way, because that money is just flowing back into the markets and people get back more into risk on mode. Of course, these are all just theories. We have to wait and see. There's a couple potential scenarios. We have to see how it ends up playing out, obviously a week at a time, 3 days at a time, a day at a time, to be able to see which path it's going to end up taking. But I just wanted to share that with you also, so that you can be prepared for multiple scenarios, whatever happens. So I hope you enjoyed this. Smash the like button if you did. Make sure you subscribe to the channel, and guys, be sure to check out my Black Friday special offer. The link is in the description down below. This is the last time you'll be able to get in for the current prices that they're at. Okay, after next week Monday, so after the 28th of November, I'm permanently increasing the price to be able to join. I've added so much more content to the members area this year. I've added a whole trading and technical analysis course. I'm adding my own trade setups, which by the way have been very nice this month alone, and in the previous months. I'm sharing that in the Discord. I'm sharing exactly how to be able to trade these markets, both in the bear market and in the bull market. We're actually able to profit in these bearish markets by shorting the markets, and it works incredibly well. So all of that is included. If you want to learn everything that I know about crypto, about trading, about investing, it's all in the VIP members area. And like I said, it is completely risk-free, because I offer a full unconditional 60-day money-back guarantee. If you want to learn how it works, come and join us, go through everything. If you decide it's not for you, you can just simply email us, let us know within 60 days. You can get a full refund, no problem at all. But if you want to stay, like most people do, because it's insane value, then come and join us. Now is the best time, during the Black Friday special offer. So for the next 7 days, you can join for the best price it's going to be. Next week, prices go up. Check out the link in the description down below, and you will be able to see all the details, and you'll be able to sign up there. Thanks for watching. Stay safe, manage your risk, and I will see you in the next video.